All right, the topic of this discussion is going to be collusion. And I know we have about a half an hour of time allotted for this. We're not going to need it all. It is not a complicated topic. It's very simple. If you think it's something you shouldn't be doing, if it feels like it's something you shouldn't be doing, don't do it. Collusion, as defined, is an agreement between two or more parties, sometimes illegal and therefore secretive, to limit open competition by deceiving, misleading, or defrauding others of their legal rights, or to obtain an objective forbidden by law typically, by defrauding or gaining an unfair market advantage. When you're dealing with collusion in the realm of real estate tax sales and tax deeds, it's basically broken down into two different, sorry about that, here's your back to that too. It's broken down into two different types of collusion. One is going to be between a tax purchaser and a county official, and the other is going to be between a tax purchaser and another tax purchaser or multiple tax purchasers. So let's deal first with the collusion concept between multiple tax purchasers. There are several ways that this can take place. The first is if one or more tax purchasers get together and agree to divide up a tax sale, meaning just the properties itself. Tax buyer A decides he's going to take this certain section, tax buyer B is going to take a separate section, tax buyer C is going to take. The idea of collusion in that type of situation is very basic, and anybody involved in that type of activity is knowingly committing collusion. The second type between tax buyers is going to be a situation where you get together to start agreeing on what tax rates you're going to bid on. And again, my conversation is specifically related to Illinois, because in Illinois the bid process starts at 18%, goes down to 0. It can never go below 0. You can't do negative bids as you can in some other states. So in this type of scenario, you've got multiple tax purchasers agreeing to bid a certain fixed rate. And if you've done that, you've removed competition from the element, and that is collusion. It's a brief history. In Cook County, years ago, let's go back maybe 20 years, what you would typically have at a tax sale is 10, 12, maybe 15 people sitting at a table. And the tax sales in Cook County used to last 4 months. It would start in January and go through April, sometimes into May, and they would list off every parcel item by item, and these 12 individuals would bid. Now, typically what they would do is each one of them were tax buyers. They were principals of the company. Their money was borrowed from banks, and they would bid tax rates based on their cost of money, what they want or what they thought was a reasonable return based on the property itself. Is it a house? Is it commercial? Is it industrial? Is it vacant? Is it in a good area? Is it in a bad area? And these are all the factors they would use to bid. The one thing to understand about the group of tax buyers is they wouldn't collude back then because they hated each other. These were people that wouldn't talk to each other outside of the tax sale. It's very difficult for them to agree to anything because they were competition, and they took it as such. Some of these tax buyers, in fact, were lawyers that would not even go to the Chicago Bar Association's, our real estate taxation committee meeting, for fear that they would run into another one of the tax buyers at these meetings. So the concept of these tax buyers getting together and colluding at that point in time was ridiculous. It didn't happen. There were never any charges of it. The rates were usually reflective of the market rates at that point in time. Back in the early 90s in Cook County, this system somewhat changed. There was a lot of out-of-state money coming in, as you see now, with all these arbitrage funds coming in and investing. And so now the piece of the pie kept getting smaller and smaller. And so what the tax buyers would do at this point in time, first of all, it drove the tax rates to 0. So there was no more competitive bidding. It was, if you bid 18 and you got something, you probably made a bad buy because nobody else wanted it. Or you bid 0, and that's what it went. But what it turned out, the result of all these zeros being bid is the tax buyer's piece of the pie kept getting smaller every year. So the result of that was that the tax buyers then, I'm tax buyer A, and I'm going to show up at the tax sale. I would now have 10 subsidiary companies that I set up. And I would bring in these 10 companies to bid at the tax sale. And we're all going to yell 0 at the same time. Now my proportionate share should somewhat get it to be a little bit bigger. Problem is, every tax buyer started doing this. So you would get off, and the tax sales at that point in time were held in the Cook County building on the second floor. And you'd get off the elevator and there'd be 200, 300 people sitting in this room yelling zero at the top of their lungs, all simultaneously. The tax buyers at that point in time filed a lawsuit against Maria Pappas to get rid of this multiple bidder situation. They said it was a problem and it stopped the competition because the small tax buyer couldn't compete with the large tax buyer because the large tax buyer could afford to hire 30, 40 people to go to these tax sales and bid zero on their behalf, whereas the small guy couldn't do that. So there was a lawsuit filed, and Maria Pappas said, no, we have the right to do that. And the ultimate result of the lawsuit was, yes, Maria Pappas, as the county treasurer, has the right to run her tax sale as she deems fit. So they were stuck with these multiple bidders. Now, the thing with multiple bidders is they're robots. If 10 people sit down at a tax sale and the bidding starts at 18 and the bidding goes down 17, 16, 15, it's going to stop somewhere where that person was willing to bid the lowest. And again, that's going to be based on multiple factors. Well, you can't do this with multiple bidders. You can't send in 15 people and tell them, I want you to bid down on this. All you can tell them is highlight the pins, which is what they were doing, highlight, and bid zero. And that's why you had all of these people yelling zero. For several years, then the tax sale went at zero because of this. You'd have multiple bidders showing up, and everyone is yelling zero at the tax sale. And then right around 1997, 1998, the tax sale was about to begin in Cook County. And all the tax buyers show up, and all of their multiple tax buyers show up. And a strange thing happened. At the beginning of the sale, one of the large tax buyers sent his or her tax affiliates out of the room. So they left, got up and left the room. Well, then another tax buyer did the same thing, sent theirs out. And lo and behold, everybody sent their multiple bidders out of the room, and now you have a room stuck with 15 people, all bidding for 15 different companies with the multiple bidders gone. And guess what happened to the tax sale? It went at 18%. People were bidding 18, stop, and the county will randomly pick someone, give it to them. Next item came up, someone bid 18, stop, give it to that person. And this went throughout the sale. Is that a problem? Did anybody talk about this? Was it predetermined that this was going to happen? I can tell you as a fact, the answer is no, because I was there. I was bidding for a client that was in-house at the time, and I had multiple bidders with me. And the realization is that if you've gone through years of these tax sales at zero, all of a sudden there's an opportunity here where it's not going to be bid down to zero. Are you going to be the one to ruin it, or are you just going to take what you can at 18? Which, of course, all the tax buyers took what they could at 18. And that's great. The problem was the result of that was a class action lawsuit filed in federal court. The distinction here is it's a civil action. There's no criminal charges here. It's not antitrust or anything. It was a collusion charges against the tax buyers. And the tax buyers also, wait a minute, we did not get together. We did not discuss who was going to buy what properties. We did not discuss who was going to bid what rates. This is just the way it turned out. And the end result of that lawsuit was a federal judge said that's what's known as unconscious parallelism. So unconscious parallelism is you didn't actually have an agreement with anyone else, either written or verbal, to do a certain thing, but because of the way things transpired, everybody fell into line. And that's exactly what happened. It was unconscious parallelism, but that was collusion. The tax buyers paid some fines. You don't want it out there. No. The tax buyers paid some fines because of the collusion, but again, it was a civil charge, class action lawsuit. It wasn't criminal. Recently, there have been tax buyers that have had agreements with county officials. And these agreements come by way of, at the open cry tax sales, again, you'll have a room full of people. I'm assuming most of you have been to them or will be at them. And you have a group full of people, and everybody yells whatever the going rate may be for that particular type of property in that area at that time. And you'll all yell whatever. Let's say the common rate's 5. You got 15 people yelling 5. So the auctioneer will hand out, practically divvying out. You know, you get this one, the next one comes up, and they'll spread it out throughout the room. Well, these tax buyers in Madison County had made contributions, electrical contributions to the county treasurer. The county treasurer in Illinois is the one who runs the tax sale. And based on these political contributions, those tax buyers were getting more of the bids. And when they knew they were getting more of the bids, they wouldn't cut down the rate, so it would be at 18. This type of action is not just collusion, but because you are paying a government official to violate the law, these tax buyers were charged with antitrust violations. Now, those charges, of course, were federal charges, and they carried both criminal and civil penalties. These particular individuals ultimately pled guilty to reduce their time. They did do time in federal prison. They did pay monetary reimbursements. Additionally now, because of those actions, there is a class action lawsuit filed against those tax buyers for those tax year sales that were involved based on collusion, because, just as happened in Cook County back in 97, 98, the tax rates were all going at 18 and 17, so that they were making a killing on those, so that there's a class action lawsuit. That class action lawsuit, again, is just a lawsuit for damages for money. It's not a criminal. So when you've got the collusion aspect for the tax buyers, especially it's vis-a-vis tax buyers 1 and 2 against each other, it's going to be a class action type lawsuit. There can be criminal charges brought if they can find an antitrust violation, but historically that has not been the case. When you start dealing with elected public officials, then the federal government got involved. It became antitrust. There was criminal time, jail time, and now, and in addition to that, there's also a class action lawsuit. The ability to engage in these collusive activities, at least with the tax buyer to tax buyer, and to a lesser extent the tax buyer to the county official, has been minimized in many ways in the past. As I said, in Cook County, when you would go to these tax sales, there would be 200 people yelling zero at the same time, and those 200 people represent, 10 different companies. Now, as you all know, many tax sales, especially in the state of Illinois, are done online. You no longer have that ability to bid down a rate because you're putting in your best rate and you're going to get or not get it. We all know what that results in. And you can't set up this type of collusion now because it is all online. Fair to say, if tax buyers did engage in collusion, currently in a Cook County tax sale where it's all set up through computers, you did it knowingly. There is no way a group of tax buyers cannot go to a computer bid auction and collude without having known they did so. In the example I gave you of the 97 tax sale, where the multiple bidders just left the room, there was nothing discussed. There was nothing written. It was, I'm seeing what's going on here. I'm going to follow the lead, and we're going to do the same thing. You can't have that kind of minimal defense currently, because for it to work in the current tax sale system, you would have to get together, and you would have to every tax buyer that's bid or that's registered to the bid at tax sale would all have to agree that you're going to divide up who's going to get what properties and at what rates. Because absent that happening, other tax buyers are going to be there. They're not going to know anything about it, and they're going to continue to bid the way. And they're going to pick up the pieces they want. They're going to put in bids on that at the rates they think they're going to get them at, which is going to be the lowest possible rate. So for it to happen now, you've engaged in collusion and you did it knowingly. So collusion with tax buyers in the state of Illinois is going to be a thing of the past if it isn't already, just because it's very difficult to do it. And again, most tax buyers, even though they might have the ability to benefit each other when you do this type of activity, are not going to just because they don't like talking to each other. Years ago, back when this type of collusion activity had taken place, there were not meetings like this. There weren't hosting of national tax liens, meetings and groups. You didn't have multiple tax buyers getting together at these types of meetings to discuss the property tax code or discuss tax sales or anything else. And I would suggest that if that had been in place back then, nobody would have been in attendance, because tax purchasers would not sit down. It's a completely different atmosphere now with tax buyers. It's more, I want to say on a professional level. Back then it was more of a personal level. Every tax buyer dealt with it, that if you came in and you were bidding on something that he or she wanted, then you were cutting their rate, you were taking money out of their wallet and food out of their children's mouths. Now it's more of a business atmosphere, but more importantly, because of the way the tax sales are structured now, you're not going to have collusion just by the nature of the way it's conducted. It's nearly impossible to do it. So again, if you think it feels like it's wrong, it's probably wrong. Don't do it. Don't sit down and discuss with your competition who will buy what, who won't buy what areas you think are good, wink, wink, what areas you think are bad. You know, what is my cost of money? What kind of rate of return am I looking to get? Those are business proprietary situations, and keep them to yourselves, and you'll stay out of trouble. It's really, that's why I said this won't be half an hour. It's not complicated stuff. Collusion's pretty simple, folks. Are there any questions? Phenomenal. Look at that. Right on the half hour.